Welcome back, and joining me now for a closer look at the day's markets action is Nesi Chetty from Stanlib. Thank you so much for your time, Nesi. An air of optimism there as I looked at those market boards across the board. We did get good news on the South African inflation front today. Are things lining up for a September cut?
Yeah, thanks, Zanati. Good evening to you and your viewers. I mean, certainly most subsectors and markets in the green today. We saw European stocks edge higher, and U.S. equity futures posted a small gains as well. I think if we look at the move on the U.S. 10-year yield, not much change. It's been basically flat. It hasn't really given any guidance what the bond market is thinking ahead of, I guess, the Fed announcements tonight, and also leading up to Jackson Hole at the end of the week. We got a little bit of good news, I think, if we look at the SA inflation data. So you're right. I mean, SA inflation, if we look at the headline number, the CPI number came in slightly better than expected. So down at about July at about 4.6%. So that's the lowest level it's been since about 2021. Headline inflation over that period would have eased mainly due to energy, so electricity and fuel, and core CPI inflation also lowers as well. So the two big components, food being well contained, and also energy declining as well. Some of that, I mean, it is the beneficiary of having a stronger rand over the period. So it's likely, I guess, if I look at the SARB meeting, fairly in the camp that they will cut at the next MPC meeting, probably by about 25 basis points. But look, most countries are on their way to cutting, and I guess the US is expected to start making their move on rates in September as well.
Yeah, all right. Well, let's get into some of the JSE counters that came out with numbers today. Of course, most of them will be able to benefit from the softer inflation figures that we are seeing and a cut in interest rates. Let's start off with Spur. They're coming out with annual results, group revenue increasing more than 14%, helped by the double-digit growth that we saw there in restaurant sales. We saw the impact of the addition of the Doppio collection. Of course, these gains filtering through to the bottom line. How did you digest these numbers?
Yeah, I guess we're not surprised with the strong momentum we've had from these numbers. I mean, if we look at retail sales numbers that have come up over the last quarter, we've had strong momentum in food, beverages, and restaurants. I guess not just this quarter, but coming out of COVID as well. So if you look at Spur's result at a franchise level, the revenue would have been up by about 11.5%. Their diluted EPS was up strongly over the period by about 9% as well. So a very strong profit number. And I guess also if you look at the footprint across the business, they're trading effectively out of 701 restaurants. So it's expensive. They're growing outside of SA as well. So they've opened 11 restaurants outside of SA. The store momentum in SA is still continuing. Even though they closed 9, they would have opened 27 new restaurants. You're right. I mean, these numbers are impacted by the Doppio acquisition last year. But one must also acknowledge, I mean, trading patterns in these type of results tend to be volatile depending on where they captured. So they would have had a very strong Q1, that performance coming off a high base. Trading patterns would have been slowed in Q2, but there would have been a little bit of momentum from, I guess, some of the school holiday break. There's been quite a bit of investment into their marketing investment and capex. They will be paying, I guess, a gross dividend of about 100 or 118 cents at the final period.
All right. Well, talking about expansive and investing in capex, we know that is something that Cura has been doing over the years. They released the interim results today. We saw gains from the top line all the way to the bottom line there, where we saw double-digit growth. We did see the share price gaining about 2% today. Was this a satisfactory report card?
Yeah, I think it's a A+ report card. I mean, the across all aspects of the business. I mean, if you look at learner numbers were up 0.5% to 72,000. So good to see that's growing. I guess at a top line perspective, we always worried about at a profitability level, is there a higher level of discounts that are happening? And they've maintained the discounts to a similar period. I think what was also nice to see is that the cost growth or the total operating costs being maintained at about 8.1%. Remember, this is an employee business. So the biggest chunk of the costs are employees, which is about 2/3 of their cost base, and that grew about 7%. What was also interesting, I guess, over the period, they are looking at new opportunities. So there was the opening of new schools in Walvis Bay and also Osana in Namibia.
Yeah.
But in education and private schools, I guess it's a very capital intensive business. They planning to invest another 700 million, I guess, over the next 2 years. But I mean, it was a strong headline earnings number with growth about 16%.
All right. Well, let's get into your stock pick for today, Nesi. What are you choosing?
Yeah, so I guess one of the companies we like that has very attractive forward growth prospects and valuations is Nepi Rockcastle. It's a high quality portfolio of performing retail assets spread across Eastern Europe. It's sizable, that they've grown over time to about 7 billion euros. What we like about the business is one, there's strong growth. So the NOI across the portfolio is growing at about 10%. Within I guess, the large anchor shopping centers, those tend to be dominated by food, particularly with a Carrefour, which is a strong blue chip anchor tenant operating that space. Vacancies or occupancy costs now sitting at about 97%. We like that it's an under-rented portfolio, and we think they're uniquely positioned to extract very good yields from their 800 million euro pipeline. Another, I think, benefit that we like and we're seeing in the company is that even with their strategic disposals, they're able to get that away at about 15 to 18% premium to NAV. If we look at this company over time, we think there's robustness in the balance sheet at an LTV at 32. There's certainly capacity to gear up a little as rates come down next year. It's on a forward dividend yield of about 8%, just under 8 in euros and out, and it still trades, I guess, even with the move in the share price, at a 7 to 10% discount to NAV. And we think longer term, this is something we'd want to own in the fund.
All right. Well, thank you so much for your time and for your insights on what has been moving investors' money today. Nesi, appreciated. That was Nesi Chetty from Stanlib.